All right, housing affordability remains near an all-time low in California. In fact, just 17% of people here are actually able to buy a median-price single-family home in the state. That's according to the State California Association of Realtors. And that study also finds that you need to make at least $222,000 to purchase a home in LA County, and that costs a little bit more than $862,000. And then in Orange County, those figures jump. You'll need an annual income of around, I think it's $373,000 to afford a $1.45 million home. Joining us now to discuss the state of real estate is Realtor Kelvin with Strand Hill Properties. Kelvin, thank you for being here with us again. And again, folks are keeping an eye on this as they're looking to maybe buy their first home or the refinances, wanting to know how things are going. And by the way, if you have any family out of state, they're always looking and saying, what are you guys paying in California? Right. It's crazy. The Fed is holding rates where they are because of uncertainty with the inflation and also the trade war. We've been talking a lot about that. What does this actually mean for real estate?
Well, that lead-in is not very appetizing for a lot of home buyers, right? Welcome to California.
Yep.
So the rates and the noise out there, it's loud, right? And for good reason. I mean, we're seeing the tariffs, the trade wars still, all that stuff is affecting us. I want to talk today about some silver linings, though, for folks.
Oh, we will take those.
Okay. So the first is Proposition 19 that was voted in a few years back. A lot of folks think this is just for parents passing down a home to their children to have that property tax basis transferred over. Some folks know it as the 55 and over rule, right? So you're 55, you sell your home and buy your home, you get to use those property taxes from the original purchase. Beautiful.
Right.
But people don't know it's also for those who are severely disabled.
Okay.
And also folks who have lost their home in a natural disaster like a wildfire.
Yeah, we know that here living in Southern California.
So what I always recommend to folks who didn't know that, to start their research, go to the website it's the Board of Equalization.
Okay.
And it's BOE, hopefully it's on the screen.
Yeah, we're going to put that up here in
Great.
just a moment, hopefully.
BOE.ca.gov.
Okay.
Start your research. Beautiful thing for those homeowners as well. If you want to find out if your home was kind of on the outskirts of that fire, plug it into the LA County Assessor's website. They'll tell you if you are approved for that property tax transfer.
All right, good. So silver linings there, Kelvin, just dropped on you. Hopefully you're paying attention. And, there's been a lot said. You're talking about those who were dealing with victims of those wildfires. There's been a lot said about price gouging when it comes to rentals. We know that was a big deal initially. Are there actually some cities that are exempt from price gouging laws, right? And their folks are maybe able to do it?
Yeah. So I love the idea of not being able to price gouge someone after a natural disaster, right? I mean, that's
taking advantage of them at a vulnerable moment, the
worst time, right? But there's some carve-outs, interesting carve-outs for certain zip codes, like a Manhattan Beach or a Beverly Hills, some of those Tony neighborhoods that can just go with the free market and charge kind of what they want. There are some caveats to it. It has to be 4 bedrooms, can't have been listed before, but I can help with that information. But some of those carve-outs, and it's very interesting because you'll have a Manhattan Beach next to a Hermosa Beach. Hermosa can't raise those rents too much. It'll be, $8,000 for the home, locked in from the HUD, where Manhattan Beach can charge $80,000 a month for it. It's kind of a patchwork. It's a really interesting.
And it's strange, and you can see why it would cause confusion, even maybe to some landlords who aren't necessarily trying to fully take advantage of and they don't know the laws, and right next to each other, and you can do it, but I can't do it.
So be careful. Just do that research online. Have a realtor help you with that as well.
Absolutely. Okay, let's talk about this inflation and higher rates. Is that going to be translating to falling home prices? Folks want to know that. That was a sigh. That didn't sound good.
It's interesting. It's such an interesting market right now. So there are pockets. It's all about the neighborhood and the pocket.
Yeah.
Some are not. Some prices are just staying steady and going up. We're seeing multiple offers on opening weekends, depending on that pocket. I've seen some neighborhoods that, 75%. I just did this buyer analysis. 15 out of the 20 homes that are sold in the last 6 months or are in escrow now have had price reductions.
Okay.
So that's a big. It just depends on the pocket of where you're buying.
You saying those pockets. Give me a few pockets. Give me maybe a couple pockets that maybe prices are steady or maybe declining a little bit, or the opposite. Prices just staying there or going up.
So you think of it more like the coastal neighborhoods. It's hard to drop there.
Right.
If you're looking for a good price in Manhattan Beach or Malibu, somewhere near the ocean. It's not
clear. I mean, that makes sense.
So the further you go inland, you can see some of those price reductions. I was just talking to a young lady who's looking in Corona.
Okay.
And she's saying there are so many houses that are seeing price reductions. So inland is helpful. It's still not the most affordable state in the world, obviously, but some help there as you get away from the ocean.
I have to just tell people like I was told when I moved here, Kelvin. They just told me, look up. I said, why? They said, see that? beautiful sky, no rain, no precipitation, no snow. That's what you're paying for. And I was like,
that's right.
Good point.
We all want to be here.
Good point.
Right.
All right. Well, with the rates where they are right now, are lenders actually, are they doing anything to actually help the consumers in the meantime right now?
Yeah. So all of the big banks that you're well aware of, U.S. Bank, Wells Fargo, Chase, et cetera, they have relationship lending. So if you have money with them or bring money to them, they can help lower that rate a little bit. A lot of the thresholds are too high for most folks, unfortunately. But there's one of the big banks, and I don't know if I'm allowed to mention them, but I can share more information later. One of the biggest banks we all know about will let you use your down payment, bring it over to their bank. They'll use that down payment money that you're going to spend anyway and help lower your rate. So some of them are trying to help folks out to get in because they know the rates are still historically low, but much higher than 4 or 5 years ago.
Right. Absolutely. Speaking of rates, let's talk about homeowner insurance. It's been on the rise, and some folks are struggling, right? I have to have this insurance. You're telling me home prices are rising. Now home insurance is rising. Interest rates are higher than it's just a lot. So what do you have? The homeowners, are they trying to help to fight off this rising cost? What are they doing?
So I've had several of my clients actually go to their insurance provider, just a quick phone call and say, hey, if I raise my deductible just a little bit, what does that do to my premium? They're finding premium savings and not with a huge jump in the deductible. So you're not usually going to call your insurance company for the small stuff anyway. It's going to be a big, you flood your bathroom or something. Have that conversation with them. It might be worth it where you raise your deductible a little bit and your premium comes down substantially.
Yeah, folks are trying to find a way to save a buck. Absolutely can understand why they would want to do that. Colin Aida, thank you so much. Realtor with Strand Hill Properties. Appreciate you as always. Thank you again for coming by.
Yes.